If you're thinking about waiting for the Colorado Springs housing market to crash, you might want to think again. There are millions of buyers nationwide waiting on the sidelines for either rates to go down or for home prices to crash. Everyone wants that magic number where they're going to be between $2,000 and $2,500 a month to purchase a house, the way things used to be. The sad news is that it's probably not going to be like that if you're thinking about buying a house in 2024 or 2025. Today, we're going to address the Colorado Springs housing market so that you can get a better idea of what steps to take next. Hey, my name is Iris, your Colorado real estate resource. The housing market has been insanely frustrating for so many people. There used to be a time where I felt like everybody should buy a house, like it's the smartest thing you do. It was the same amount as rent, you might as well, but now things have changed and factors are different these days. So if you're sitting on the fence and you're not sure if you want to buy a house, then hopefully these things are going to help you. We're going to talk about back on market listings and why that affects you. We're also going to talk about foreclosure starts, mortgages, and what's trending in the mortgage world, and of course the stats and what the numbers look like for Colorado Springs real estate in general. So what is a back on market listing? A back on market listing is a listing that was under contract previously but came back onto the market to start again. Now this can happen for a lot of different reasons. The most common reasons that this would happen is if a buyer lost his loan or her loan or whoever's loan and they were not able to obtain the funding, or they saw the terms and they didn't like how much the monthly payment was. The other reason why a lot of these contracts fall out is because of the inspection items. So maybe there was a roof that needed to be replaced and the seller didn't want to replace it, although they should, because a lot of buyers can't get a loan if they don't. Or maybe the other thing could be there is a huge sewer line issue. Usually these things don't happen where the buyer falls out of contract if it's just a few minor repairs. Usually it's going to take something pretty big, like a sewer line or a foundation that is cracked and needs to be replaced, or buyer and seller can't come to terms on maybe things like radon, which is probably around $2,000 or less at the time of this video. So usually people are not able to come to terms on the amount of money that they're going to either give back to the buyer as a credit so that they can fix it, or that they're going to fix themselves. Now, the problem these days is that a house is not as easy to put back on the market as it was years before. If a house went back on the market, there were several backup offers. The listing agent can just go to the next person in line. Well, these days it's a little bit harder, actually a lot harder, to get deals under contract. And so the sellers are becoming a lot more agitated and they're wanting basically to be compensated for pulling their home off of the market. And buyers are losing their earnest money because they're not counseling these transactions properly. They're not using the terms and the guidelines and the proper ways to opt out or cancel a contract. These agents are doing a disservice to their buyers and not properly canceling the contract. So that's something that you really have to be careful with, and making sure that you are working with the right real estate agent that's going to get you the best results and protect your earnest money. All right, so my camera died in the middle of that conversation, but so now I'm back at my desk. But continuing on with foreclosures, you can see the new foreclosure starts for El Paso County hovering still pretty lower than we've seen historically. We've been seeing more short sales. I did meet a young man who was relocating for the military. He owed about $450,000 on his property, but the value was nowhere near it. The home was not cared for and needed a lot of work, and he had only owned it for just a year. And the most that he'd likely get would have been around $375,000. So we hooked him up with a short sale specialist and got the home under contract pretty quickly. I recently spoke to someone else who hadn't paid the mortgage in a few months. So when it comes to mortgages, ICE Mortgage Monitor came out with an article that talked about how 3 out of 5 mortgage holders have at least $100,000 to borrow against. So just think about what that means. Right now, as people are struggling to afford basic living due to this supreme inflation, they are able to tap into record high equity to make the most of their situations, even going on vacation using that equity. 9 out of 10 mortgage holders have some degree of equity that they can actually use, or tappable equity. Delinquencies improved in July, and the overall mortgage delinquency rate in the U.S. dropped to 3.37%, a slight improvement from June. However, it's still higher than this time last year. So delinquencies declined across most markets except for Houston, because of Hurricane Beryl, which caused about 10,000 homeowners to fall behind on payments. So serious delinquencies, which are loans 90 days late, increased slightly, but they remain significantly lower than just a year ago. While fewer borrowers missed just one payment, there was a small rise in those that were 60 days behind. So foreclosure activity saw an increase, but this was partly due to a record low in foreclosure starts for the previous month. So it's definitely not a sign of market trouble. Foreclosures are still way lower than before the pandemic, and completed foreclosure sales, even though those are up from June, they're still much lower than in 2019. Additionally, prepayment activity increased slightly as mortgage rates eased. So, what does all this even mean? It's really still a lack of inventory or available homes for sale, even though in my market, available homes has jumped over 3,000, which we've not seen these numbers in a long time, not actually since 2015. The market is so unstable and unreasonable right now. 1 minute homes are selling at a decent cadence, and the next thing you know, it's a complete stop. And it's been jerking back and forth for quite some time. We're going to hop over to the screen to take a look at a scenario of a specific listing that's been sitting on the market for a while. So this is the back end of my MLS, the Pikes Peak Association of Realtors. This is actually my dashboard. So you guys are getting a sneak peek of behind the scenes of where we get all the stats and all the information, and this is what pushes out to Zillow. But here is a listing on 6772 Issaquah Drive. This has been sitting on the market for quite some time. And when we do a quick CMA here, it's going to pull up the entire neighborhood's stats. And so what I did was I just pulled like similar homes. A lot of these homes have been sitting on the market for quite a bit. So I just wanted to pull up the neighborhood stats and see what's going on. Now the home prices, these are all 5-bedroom, 3 baths, 4 baths. Some have 2 or 3 car garages, but most of these homes are priced pretty well per square foot. We have 183, 170, 178, and these are the prices of the homes. And then as I scroll down, you can see that the max days on market is 138, and the average is about 53 days on market and selling for about 99% of the list price. So not quite getting all the way the full price, but pretty close. And then, so as I go back to the listing, this house is actually in a really good neighborhood. It's the Indigo Ranch at Stetson Hills. It's an emerging neighborhood. A lot of shops are going in. It's very close to Banning Lewis Ranch, and it's on the northeast side of Colorado Springs. So that area is growing. The views are gorgeous here. So this is a really nice home, and the curb appeal on this house is gorgeous. The taxes are okay. It's about $3,000. Actually, this is not accurate. But for 2023, that just needs to be updated. Let's actually look and see what the taxes actually are. This home is valued on the assessor for $606,000. And the taxes are actually $3,500. So this just needs to be updated to 2023. But the annual dues are $225. That's really good. And then you have a good reputable builder, Classic Homes. It's a ranch style home with a full basement, 5 bedrooms, 3 bathrooms. I mean, if it were me buying this house, I would try and negotiate a seller buy down where the seller pays down the rate instead of having them reduce the price continuously. Obviously, this started at $650,000, but it'd be nice to try and get a low monthly payment instead of having that price reduced. So you can hold on to that equity. And that's what I would do if I was buying this house. But the homes in this area, the value holds pretty well. I mean, you can see that the prices are high for this area. So if I was buying in this market, this is what I would do. Instead of waiting for a market crash or for rates to go down, right now I would take advantage of the down market and try and put together a deal, which is going to be a lot easier to do now than when everyone else is buying. If the market picks up and buyers jump back in, then it's going to be harder to get a deal on real estate and have a smoother transaction. What you don't want to be doing is competing with a bunch of other buyers and not being able to get the terms that you prefer. Hey, thanks for watching. If you need help with real estate, please feel free to book a call. The information is going to be below this video, and I'll put it in the pinned comment as well. And if you want to learn more about how strange this market is, go ahead and click the video that's popping up next on the screen. It's going to explain everything, including the lock in effect and how that's affecting the housing market too.